JJ the CPA here. This CARES Act that's just been signed into tax law is phenomenal. It is just full of juicy, beautiful, wonderful, helpful provisions in so many different ways. I hope you're watching all of my videos as I'm covering the CARES Act, okay? So there's a payroll tax deferral in the CARES Act. And what does this mean? It's pretty straightforward and it's pretty simple. So it defers the employer's share of the 6.2% Social Security tax, including self-employed individuals, through the end of 2020. The deferred tax must be paid over 2 years, so half in 2021 and the remainder by the end of 2022. What? Wow. Now, what does that really mean? Let's, as I would say with one of my friends is, let's unpack this, okay? Let's unpack what we're talking about here. So when an employer pays an employee, okay, the employee has Social Security and Medicare taxes withheld, combined at 7.65%, okay? The employer has to match that, meaning the employer pays the employee has their taxes withheld, okay? But then in addition to the payroll that the employer pays the employer incurs payroll taxes, which is also 7.65% of the wages that is being paid to the employee, okay? Now, on Social Security wages for 2020, the Social Security tax, the 6.2% tax that's included in that 7.65%, don't let your head spin, stay with me. But that Social Security tax, okay, that only applies to wages up to $137,700 of wages in the calendar year of 2020. After the employee makes over that dollar amount, there's no more Social Security tax withheld or matched or paid by the employer. So I'm just giving you that technicality there. I'm kind of getting it out of the way for those that really know all the finite details related to Social Security tax. So let's roll it back. So when an employer pays the employee, right? If they pay them, if the payroll is gross wages of $10,000, the employer is paying the wages of $10,000 plus 7.65% in Social Security and Medicare taxes, which means they're paying another $765. So the out-of-pocket for that employer then, of course, is $10,765, right? What this has put into play with the CARES Act is that for 2020, the employer can defer that Social Security tax that the employer pays, the 6.2%. So they cut payroll. There's $10,000 in payroll, okay? Right now, before this, the employer's going to have to pay in $765 on top of that. Now, because of this, the employer can say, you know what? When I cut that $10,000 of payroll, the $620 of Social Security tax that I have to cover as an employer, I don't want to pay it right now, okay? I'm going to defer it, and I'm going to pay that in 2021 half, and the other half in 2022. So if you have someone and, they've got, $300,000, $400,000, $500,000 worth of payroll, in 2020, so on 500,000, okay, that's $31,000 in Social Security taxes that don't have to be paid in now. What? That's huge. That's a huge help. I know I'll be taking advantage of it. So at the end of the day, there is a massive amount of help for employers. And the purpose of that help is to keep employees on, keep paying the employees. This is huge, okay? So we've got now, right now, okay, it's after midnight, so now it's March 28th, 2020. Here's what we have now for employers, okay? We get payroll tax credits if people are out related to COVID or taking care of their kids because the schools are closed, okay? We got tax credits that if a business was shut down or partially shut down or lost revenue. We have payroll tax credits up to 50% of wages paid to employees during that period of time, okay? We also have the Triple P loan, right, out of the CARES Act. You can borrow money based on the last 12 months of payroll. If you use it for payroll, then you don't have to pay back that loan. See my videos on all of this stuff. There's a lot more to those, a ton more to those. So we have two different kinds of tax credits, a way to get money and pay your employees and not have to pay it back. And then now we have a payroll tax deferral, which, is $31,000. Okay, so let's just say that you don't have $500,000 in payroll. Okay, let's just say that you have $200,000 in payroll. Well, that's $12,400. Okay, if you have $100,000 in payroll, it's just you that's on payroll. It's just you, and you pay yourself $100K wages. That $6,200 you don't have to pay in. This is massive. Okay, all right. Hey, boy, I'm loving this CARES Act, and here's why I'm loving it. I have a lot of clients that they need this relief. Okay, so bottom line. Keep your employees on. You got lots of relief. Take advantage of everything that's being provided here, because the reason it's being provided to you, business owners, small business owners, is so that you will keep your employees on. All right, hey, thanks for tuning in. I appreciate it. If you would, please subscribe to my YouTube channel. And then anywhere on social media, you can find me with hashtag JJ the CPA. All right, I always end every video with this, and I'll tell you, I've got a t-shirt for you CPAs if you happen to be listening. So email me and I will send you this t-shirt that says this, which is how I end every video. You've never met a CPA quite like me.